Hey everyone, Tesla reported negative 2.5 billion in free cash flow in the latest quarter, and the cost-cutting efforts it initiated a couple of weeks ago should help alleviate some of that concern. I'll discuss its free cash flow issues, the inventory buildup, and what Tesla is doing to correct these problems right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so I highlighted negative free cash flow here, $2.5 billion negative in free cash flow for Tesla in its latest quarter. That comes as the first quarter of last year, it generated 441 million in free cash flow. The previous quarter in Q4 2023, it generated 2 billion in free cash flow. Now, Tesla has plenty of cash on hand, over 26.8 billion to be precise, even after this 2.5 billion cash burn in the latest quarter. So its balance sheet is not a problem. It's got one of the strongest balance sheets of any car company in the world. So it does have significant cash. It can continue at this rate for a very long time before any problems arise, although I don't think it's going to continue in a negative free cash flow state. This is just in the near term as it ramps up spending on capital expenditure to build out its AI capabilities. It's also spending significantly on capital expenditure, trying to retool its existing facilities. It's trying to bring forth several lower cost models, although I don't think it's going to bring that $25,000 priced model. I think it is going to be able to bring forth a lower priced model, something still with a 3 in front of it, 30,000, 32,000, 35,000 maybe, but something lower than what it has now, which is a lineup with mostly everything above $40,000. So that's going to help it, and that's going to alleviate some of that concern. It can also decrease production because inventory was one of the main reasons its free cash flow was negative as well. It added significant inventory of vehicles because it produced significantly more than it sold. And when you produce more vehicles than you sell, you're using cash to produce those vehicles, and you're not getting cash when you sell those vehicles. So they're sitting on your balance sheet and they're eating up your cash. That's why it's important for car companies to go through these inventories quickly because they are expensive. Each car costs tens of thousands of dollars to make. So each one that you have sitting on your lot is an opportunity cost of capital just sitting there, not to mention that as it gets older, it becomes less desirable to consumers. Now, I highlighted inventory is becoming a problem now. For several quarters, I've been highlighting that inventory was not an issue for Tesla. Even though sales growth had been slowing, inventory had not been an issue. You can see here, they stayed roughly consistent with the mid-teens inventory days of supply fluctuating between 15 and 16 for the last 4 quarters. But in this quarter, almost doubled to an inventory of 28 days. 28 days supply it has on hand, way more than usual, and it's really going to need to do something to get that inventory sold. It's already slashed prices on several models. It may need to cut prices even more to get through this backlog of inventory, unless it wants this inventory to build up, which no car company likes to have, because the factors I mentioned earlier, and then I'll add an additional factor, is you've got to pay to store these vehicles, right? Cars take up a lot of space. And sure, you might have some space in your existing facilities, but if you approach maximizing those facilities and then you need to rent out additional facility to store your inventory, those costs start to add up. So you might be better off cutting the price of inventory by $2,500 or $1,000 per car, because it's more reasonable to do that than to keep these vehicles on hand, and then you've got to store them, you got to wash them, you got to maintain them, you got to pay for security, you got to pay to move them, and those costs add up, and that's man hours that you're paying for on top of that. So that's why you've seen Tesla cut prices so often and so much, is because they're building up this inventory. People don't want these cars as much as they used to. All right, so here the CFO goes into deeper discussion about the cash flow, saying that they had negative free cash flow of 2.5 billion in the quarter. The primary driver was the increase in inventory from a mismatch between builds and deliveries. In other words, lower customer demand than we thought we were going to have. Customers didn't buy as many as we produced. And they expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. And one way they can do that is just by producing fewer vehicles in the next quarter and trying to work through the existing inventory. Offering incentives. For instance, if somebody goes to the Tesla website and they're trying to custom build a model, Tesla can send an on-screen pop-up and say, why don't you buy this similar model that we already have in inventory? And by the way, we'll give you a $2,000 discount if you choose this model we already have versus custom building another model that we have to make. So there's ways that Tesla can adjust the inventory so that it matches more with what customer demand is right now, the new reality of the lower customer demand. But it's good news that the CFO is forecasting positive free cash flow in the next quarter. And part of that reason is going to be that they reduced their headcount by over 10%. And these savings are expected to be well in excess of $1 billion on an annual run rate basis. So this is going to save them roughly $100 million per month in costs just by having fewer staff. Now, these savings from initiatives, including their cost reductions, will help improve their overall profitability and ultimately enable us to increase the scale of our investments in artificial intelligence. So the money that they save from this area, they're going to deploy in expanding their investments in artificial intelligence. In other words, their driverless car technology that they've been trying to bring out since, as long as I can remember, 2014, 2015 is when Tesla first started talking about being close to launching driverless cars. Here we are in 2024, and they have better full self-driving that can, drive in certain conditions if the weather is nice and it's sunny and there's no clouds and there's no rain and on and on. The conditions have to be right, but it is improving. But you've got to get to such a level that governments will approve your technology to operate on the roads, and they're not there yet. And that's why they're spending so much to try and develop this capability, because they understand that it's not there yet and they need more work on it. And that spending will also impact profitability, as that's taking billions of dollars in capital investment and recurring expense to try and develop this technology. But these moves in terms of the inventory rebalancing will help Tesla, and I fully expect Tesla to return to free cash flow positive, just like the CFO says. I don't think this company is going to be a negative free cash flow company for the near term or the long term. I think Tesla has done a great job in reaching economies and scale sufficient to generate free cash flow. I don't think they're going to want to go backwards, despite the fact that they can. They have more than $26 billion. They can afford to be negative for several quarters to invest in the growth of the business if they so choose. I don't think they're going to want to do that, though. I think they're going to want to stay cash flow positive. They understand the benefits from investors' viewpoints of being cash flow positive. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.